Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Sonia and Nigel joining us today. Well, we are in for a rough start, as the screen must be telling you. Look at what's happening globally. There's a big risk of, this is a point we've been making for some time, that the Indian market has been ignoring global risk off, especially emanating out of the money market. For how long can it continue? The bond market route is finally catching up with equities in global market as well. The US 10-year yield overnight saw a big move, 0.16% to 3.353%. Remember, the 3% threshold was broken long back, and we're at 3.35 now on that. And the strong US ISM data is all but confirming. It's pretty much nailing in a 75 basis point rate hike. That is something which the market perhaps now has to deal with. And that's what the dollar index is also telling you, that after retreating multiple times from 110, finally it's crossed that and trading at 110.5. But this morning, if you're looking at positives, it's that the Brent crude has seen a big slide because of that. So that may suit some blow for India. But the SGX Nifty still is indicating that we start 200 point lower, if the SGX Nifty is right, that is, and then take it from there. Sonia, Nigel, hi, morning.
Hi, morning, Anuj. Morning, Nigel. Absolutely. I mean, today is going to be a rough day, right? No two ways about that. I guess in the run-up to the FOMC meeting, which is on the 20th and 21st of September, this caution, this volatility, this uncertainty will continue to be there across most global markets. So that's the overhang. Of course, the 75 basis points rate hike is the base case assumption now for most on the street. So perhaps that's making the markets a bit tentative as well. Not just the US markets, even Asia is under a lot of pressure this morning. So you have the Nikkei, which is down 320 points the last time I checked. So across Asia, there is a risk off. The US 10-year bond yield, as we were just discussing, has hit the highest level since June. Brent crude is also below that $94 a barrel mark on perhaps demand fears there, almost at 91 now on Brent crude. The Nifty outperformance, though, is something that has continued for a while, and we've been holding on to this 20-day moving average of 17,620. The buying from FIIs continues. In fact, yesterday, both FIIs and DIs bought in the cash markets. So some level of confidence is there in this market, Anuj, given the fact that we've been so resilient despite the global fall. But what is the best way to approach this macro cue? You know, there is a big rate hike coming. Risky assets are not in favor. For an Indian investor, how does one approach it?
You know, you respect the screen, Sonia. The market's been outperforming for some reason. So, you never question the market's wisdom. My sense is just in the, just for today, for the first hour, you see if the SGX, if the Nifty futures are respecting the SGX Nifty low. Normally on days like today, SGX Nifty low does not get violated. And, selling after 200-point gap down is not a good risk-reward trade. It may work, but it's not a good risk-reward trade. A good risk-reward trade is actually to see if the market does not fall a lot. And then in that case, if the SGX Nifty low is your stop loss and you buy, and that normally makes sense. Whether that works out or not, we'll find out. And the reason for that is our market has been strong. The price action has been quite strong. We have been ignoring global risk off. Of course, at some point, we will participate in that. It cannot happen that the global market just keep falling and we keep rising. But it can happen that maybe we fall less. Even if we align with global market, we fall less. As you've seen year to date, our market clearly has been a big outperformer. I think the level to watch, and from trading point of view, this level is sacrosanct. I've been making this point for last 3 or 4 days. The 20-day exponential moving average of 17,475. That's been well respected. And in fact, there's a good chance that today you get very close to that. So again, from the risk reward point of view, that will make sense that, you normally, because the market structure has been buy on dips unless told otherwise. So you try to see if that buy on dip works or not. I mean, today you get a dip. So you try and see if it doesn't work, you get stopped out. It's very clear and very well defined. Only on a close below this 17,475 do we negate the near-term texture of the market. Now, interesting data from FIs. They've been buying in cash market, but they've been hedging a lot in the futures market. In fact, yesterday also they net added about 11,000 shorts, and we are now at 81% short positions once again on the futures. Once again, I ask the same question, if these shorts do not get followed through. Today it looks like they will, but it will be interesting to see the actual open and then after that the move. For the medium term, there are two levels which are well defined, 17,200 and 17,800. Below 17,200, you make a lower low. Above 17,800, you make a higher high. So in that sense, this is the battle. A close below 17,200 or a close above 17,800 decides the next major move. Till then, you will keep getting volatility. You'll have to negotiate in this band. But as I said, the larger impulse of the market is to buy the dip. And that doesn't change unless we close below 17,475. The other issue is that domestic facing stocks, they have been outperforming. You look at capital goods, autos, FMCG, Bank Nifty, most of these indices are in a bull market of their own. It's just the IT index which has sort of kept the Nifty under check. But my sense is that if the market has to recover, once again, it will be on the back of domestic facing stocks. So that's something that I'll keep an eye on. Najal, hi.
Well, hi, morning, guys. The valid point, Anuj, in terms of the broader markets, if you look at the headline index, yes, you'll see the Nifty was up or down 20, 30 points odd, but the real outperformance came from the Midcap index. The Midcap index was up close to around 0.5% odd, and there were plenty of stocks that were giving you big returns out there, and some of them have already rallied in the last couple of months or so. But just a quick point on the flows picture. Well, as a headline, it looked pretty good that the FIs as well as the DIs, both of them were buyers. But a little deeper look into that, the FI gross volumes in the past couple of days have been relatively lower in comparison to the last 1 month or so. So participation is not full tilt as of now. So today's FI data will be something that I'll be tracking very closely. On the DI front, remember yesterday you had a large trade. That's a Syngene trade, more than 1,000 crores odd. We had ICICI, well, they were ICICI mutual fund. They bought close to around 15% of that block. So close to around 150 crores odd was likely. That number of around 600 crores DI by number, it includes a larger chunk, I think, of the Syngene flows. Only ICICI mutual fund got captured, but I believe that domestic mutual funds, they participated in a large way in that large trade as well. So the DI flows as well is something that we'll be tracking closely. The FIs, they wrote calls very aggressively yesterday, close to 60,000 contracts odd. The sense you're getting is we'll require a bigger queue, a bigger trigger, a bigger push to get past that 18,000 odd mark, because for the last 1 month or so, we've been going to around that 17,900 to around that 18,000 odd mark. And from there, we've seen some bit of resistance. For starters, we'll be pulling back. But as we mentioned earlier, the 20 DMA is crucial. Maybe risk reward favors buying that, early morning dip. Let's see how things pan out. So never else.
Absolutely. And there's less than 15 days for the FOMC meeting, right, on this 20th and 21st of September. And in any case, the view now, the narrative now is that money has been moving out of developed markets like Europe and US because of the challenges over there, and perhaps into markets like India. Let's see if that's something that continues to play out. For today particularly, it's looking like it's going to be definitely a tough start. But here's what you'll get to see. On the equities front, first up, we have an opinion coming in from Venugopal Gare of Bernstein, who says that the Indian equity market has now breached the upper end of the range and structural arguments on India have returned. There is still macro uncertainty. Bernstein's recent conversations with most CIOs of domestic funds suggested a cautious stance at these levels. Risks include a sluggish rural economy, return of inflation if global rate actions fail, limited government balance sheet flexibility, and the impact of higher rates. Even as they maintain a core positioning, Bernstein moves to underweight on most consumption end markets, downgrades industrials to an equal weight, and upgrades building products and energy to an overweight.
Okay, let's get you some money market calls as well. Kunal Sudhani of Shinhan Bank says that the higher than expected improvement in US services PMI lifted the dollar index appeal. As the US economic data is displaying a stellar performance, Fed Chair Powell has the luxury to sound hawkish in his speech on Thursday. US 10-year yield continues to move higher, while dollar index may test 111.5 levels. For USD INR, 79.70 is acting as support, while 80.2 is resistance.
All right, and on the bonds today, Neeraj Gambhir of Axis Bank says the market has started the week on a positive note following the fall in global yields post the non-farm payroll data released last week. For the rest of the week, the market will take cues from the upcoming ECB meeting and the Fed Chair Powell's speech later during the week. He expects the 10-year benchmark bond yield to trade in a range of 7.1 to 7.2% for the week.
Well, we have a lot of stock-specific action to discuss as well, and we'll get to that in just a bit. But the top stocks that we're tracking today, we're looking at steel stocks. That's Tata Steel, JSW Steel, JSPL, as well as SAIL. GMM Pfaudler, that's another stock that will be in focus. HAL, Paras Defense, RCF, and NFL. All of them will be on our radar on the back of positive news flow. They could be relative outperformers. While you have Hudson Agro, that stock could open up in the red owing to that promoter sale.